When the company liquidate, to look after what are the value of the asset we are having, what are the value of the liability to pay off, a man is appointed called liquidator to take over the administration of the company. The tribunal says to close down the business because if the tribunal finds out there are some mistake in the company, they are doing illegal business, whatever may be, the tribunal order, automatically the company will be closed down. Hello, my dear student. I am Dr. B.S. Subramania, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram, First Aid College, a Temple of Excellence, MYSURU. I am going to hand Advanced Corporate Accounting 4th Semester Unit 4, Session 1 in favor of Liquidator Final Statement of Account. So, in examination point of view, your syllabus goes like this. Number 1 is redemption of preference share. Number 2, acquisition, merger and acquisition of a company. Number 3, internal reconstruction. Number 4, liquidator final statement of account. Last is one theory question we are going to ask. So you concentrate for 15 marks. As a teacher, I am saying 1 is redemption of preference share. 1 is liquidator final statement of account, another internal reconstruction. If you feel merger and acquisition as a tough, you can put it as a choice for you. Better you can find out. But this is easy. We'll move on. What is actually liquidator final statement of accounts? Liquidator final statement of account. Liquidation of a company is a process by which dissolution of a company is brought about and its property administrator for the benefit of its creditor and member. An officer called liquidator is appointed and he takes over the administration of the company. When the company liquidate, to look after what are the value of the asset we are having, what are the value of the liability to pay off, a man is appointed called liquidator to take over the administration of the company. The liquidator takes over the control of the company, collects his asset and pays the debts and finally distributes the surplus among its members in accordance with their rate. So what is his duty? When he is appointed as a liquidator, first he will sell the asset, whatever the money can, will distribute or pay the debt, whatever the amount available, that will be distributed among the members, preference shareholder and the equity share according to their holding. Then we'll move on. The liquidator, or we can say the liquidation or winding up ultimately leads to the dissolution of a company. Liquidation means closing down of a company. In between winding up and dissolution, the legal entity of the company remains and it can be sued in court of law. On liquidation, the power of the board of directors will cease and will vest with the liquidator. The members of the company will known as contributors. When the company liquidate or dissolution, in the case of the partnership, we say dissolution, but in the case of the company, it is called liquidation. Legal entity of the remains, it can be sued in the court of law about the company, whatever we have to receive. So, on the liquidation, the power of the board of directors will cease and invest in the liquidator. The members of the company will be known as contributors. The liquidator of the company will collect and realize the asset. The duty of the liquidator is to realize the asset and distribute the proceeds among the right claimants as per the proceeds of the law. As per the law, you have to pay the debts one by one. The company's life will come to an end and it will be no more an artificial person because it's going to be closed down now. In the eyes of law, the company has been closed down. The liquidator is entitled to get a remuneration as directed by the court or as fixed in the general meeting, as the case may be. He will get some commission as per the court or it has been fixed as per the meeting of the company. Then we'll move on. Modes of winding up. What are the types of mode of winding up is there. As per the section 270 of the chapter 20 of the Companies Act of 2013, the winding up of a company may be either by the tribunal, voluntary. Winding up by the tribunal means winding up by the tribunal is known as compulsory winding up. It's a compulsory winding up made by the law according to section 271 of Companies Act of 2013. The tribunal may order for the compulsory winding up. A company may, on a petition under section 270, would be wound up by tribunal. The tribunal says to close down the business, because if the tribunal finds out there are some mistake in the company, they are doing illegal business, whatever may be, the tribunal order, automatically the company will be closed down. If the company is unable to pay its debt, if the company has by special resolution resolved, the company may wound up. Now, these are all the method. Then, if the tribunal has ordered the winding up of the company under the chapter, this is 29, if an application made by the registrar or any other person authorized by the central government by notification under this act, the tribunal is of the opinion that the affairs of the company have been conducted in fraudulent manner, not in a correct manner, in a fraudulent manner, or the company was formed for the fraudulent and unlawful purpose, or the person concerned in the formation or the management of its affair has been guilty of fraud, misfeasance or misconduct in connection therewith, and that is proper that the company may be wound up. This is the reason, if the court find out if the company is fraudulent or the members of the company is fraudulent, the court has a power to cancel the registration. If the company has made a default in filing with the registrar its financial statement or annual returns for immediately proceeding for 5 consecutive financial years. If the tribunal is of the opinion that is just and equitable that the company should be wound up, if the tribunal find out that as per their opinion it should be wind up, automatically the company will be wind up. Now, voluntary winding up as per section 304 of the Companies Act of 2013, the circumstances in which a company may be wound up voluntarily are if the company is in general meeting passes a resolution requiring the company to be wound up voluntarily as a result of the expiry of the period of its duration, if any fixed by its articles or on the occurrence of any event in respect of which the articles provide that the company should be dissolved. As per the Companies Act of Section 304 of the Act of 2013, these are all the conditions they have put forth. If the company passes a special resolution, that the company may be wound up voluntarily. Then, liquidator or final statement of account. The main job of the liquidator is to collect the asset of the company and realize and distribute the monies realized among the right claimants in order to record all cash payment and receipt. The liquidator maintain a cash book. He has to subtract of the cash book to the tribunal in case of compulsory winding up and company in case of voluntary winding up. In the event of the affairs of the company finally wound up, he has to submit a final statement of account. Such a statement termed as liquidator final statement of account. So what is duty? When the company look after, first he will find out what's the value of the asset and value of the liability. Then he will realize the asset. After realization of it, he will pay the debt according to the what's called the merit of the debt. Then we have got a certain rules and regulation how the payment has to be made. According to that order, the payment will be made. The last two persons are preference shareholder, their dividend. If any amount left over, that goes to equity shareholder. Then this is the order of the payment. The liquidator task is to realize the asset and disperse the amount. The following is the order in which disbursement will be made by the liquidator. This is the method of following. This is the method you have to follow. First, you have to pay to secured creditor. Then you have to pay the legal charges. Then liquidator remuneration. This is a perfect order. Then liquidation expenses, payment to debenture holder and other creditor, preferential creditor, unsecured creditor, whatever the amount left over, that goes in favor of preference shareholder and preference shareholder and dividend. If any amount is left over, that goes to equity. But this format the student has to learn. Once you realize the asset and distribution start from first is secured creditor, second is legal charges, third is liquidator remuneration, fourth is liquidation expenses, number 5, payment to debenture holders, preferential creditor, unsecured creditor, preference shareholder and equity shareholders. The various claims will be satisfied by the liquidator in the order mentioned above. If the money available with the liquidator is exhausted after paying, say, preferential creditor, payment cannot be made to unsecured creditor or anybody else coming after the preferential creditor. Liquidator final statement is only statement, although they presented in the form of an account, no double-entry involved. It is really summary of the cash book. After the start of the liquidation, keeping in view the statutory requirement, the form of liquidator final statement is given below. We have got certain format. According to format, sometimes the money may be over after payment of what's called preferential creditor. No money is available for preference shareholder or equity shareholder. That depends upon how much money is available at the time of liquidation. This is a format. Liquidator, cash at bank, asset realized, any surplus from a secured creditor, then whom to pay first. First you have to pay the secured creditor, then you have to pay the legal charges, then you have to pay the liquidator remuneration, then you have to pay the liquidation expenses, then you have to pay the debenture holder. This is a perfect format. Then you have got a preferential creditor, then you have to pay to unsecured creditor, then preference shareholder and equity shareholder. So this format you have to follow. Don't change the format. Whom to pay first? Secured creditor. After realizing whatever the cash at bank in the balance sheet is available, they should be put it here. Whatever the asset realized in the adjustment, that should be taken into consideration. Then whom to pay first? Secured creditor. Then legal charges, liquidator remission, liquidation expenses, debenture holder, preferential creditor, unsecured creditor, preference shareholder plus dividend if any amount goes to equity shareholders. This format you have to follow. Then cash at bank means the cash and bank balance at the date of liquidation should be shown as the first item of the receipt side. Asset realized, amount realized on sale of other assets should shown here. Even in the case of sale of secured asset by the liquidator, the gross sale proceeds should be included in this item. Surplus means from secured creditor in case the secured creditor themselves sell all the security, they will pay to the liquidator any surplus after the meeting their claim. Any amount is left over after the payment to secured creditor, that will be shown as a receipt. Only the surplus will be shown on the receipt side. Only the what's called surplus should be shown. Hope you understand. So this is what is liquidation. In the next class, we'll start with the liquidation problem. The format the student has to learn the perfect format. The problem will be easy. So we will go in the next session with the problem. Till then, goodbye. Meet in the next session.